Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, September the 16th. The year's 2021. Let's talk trading, little by little, part 4 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, as usual happens, we run out of time, so I guess we need to pick up from where we left off and give the traders some more ideas what they can do little by little to improve their trading.
Yeah, I think where we left off the last time, I was talking about this whole idea that, there, generally speaking, when something's not going right or not going very well for you, it's not usually just one thing. It's usually a whole host of things, a whole number of things. And when you don't go and step back, what happens is sometimes I think we sit there and say, "Well, that's wrong, that's wrong, that's wrong, that's all these things are wrong," and it looks like a big, massive problem. And this is true in life, and it's also true in trading. And I think that the first thing that we need to go and do is, we say, okay, well, practically, what can we do? I think the first practical thing we need to do is sit there, record all our trades, and then go back and look at all of our trades, and then look at our trades and say, was that a good trade or a bad trade? And you touched on something, though, I think is right where we left off the last time. And you touched on something where the whole idea is that a good trade is not necessarily a winning trade. And we have to get that out of our brain that, oh, that was a great trade. Look, I made, $500 on that trade. Or I made $1,000 on that trade. Well, it could actually be that $1,000 trade that you made could have actually been a terrible trade because you broke your rules. Yeah, you got lucky, but that's all you got was lucky. And we're not looking for lady luck to shine upon us. Sure, it helps, but the biggest thing is that what we need to be doing is following our rules. And if we follow our rules, that's what goes and makes us profitable long term. Lucky, we can be lucky and we can have a profitable day or profitable week or profitable month, but I don't know about you, Kiro, but I know with me, but my luck usually doesn't last that long, and eventually it comes back around and gives me a bite in the behind,
Yeah.
And so we need to go and sit there and put some things in our place. Do you think casinos sit there and and set up the rules that they have and not follow them and then follow them and not follow them and then do follow them? No, of course not. What are they doing? They're going and trying to stack the rules as best as they can in their favor so that they can win long term. They may have a day where they actually are negative, but they know at the end of the month they're going to have a bunch of money sitting in their bank.
Yeah. Well, I was reading an article earlier today, and it said something that I think we can really look at trading in the same way. It's that we can control our thoughts, we can control our behavior, and we can control our emotions. And I think if you focus on those three things when you're trading, controlling your behavior is sticking to your plan. Controlling your thoughts would be, as you just mentioned, it's not necessarily a good trade because you won. It's a good trade because you followed your plan. And then your emotions is basically, you don't get happy or you don't get sad or mad or whatever. You just are basically inert to what's going on, and you just react accordingly. And so, yeah, and the other things you can control in trading, you can control when you enter, you can control when you exit, you control your risk, you control your position size, you control your stop loss. And beyond that, there's really not much else you control.
Yeah, the rest of it all comes down to the market's going to do what the market's going to go and do. And so we saw this big drop over the last 2 hours, right? And what in the world caused that? And our fundamental friends will go and say, well, it's because of the news that came out, today on the on core prices and also on the manufacturing index. They came out very positive for the U.S. And of course, the market's going to drop. But that's what they would go say. But you and I, TRO, how many times have we said, "Oh, look at that! The news is very positive for the U.S. Let's go and watch them instead of the pound dollar going down. We're going to watch the pound dollar go up." And how many times does that happen? So, we can't control those things. There are other things beyond our control. They're beyond what we're able to go and do. And one of the things that we have to go and keep in mind is that we can only control what we can control. And when we start trying to control things we can't control, that's when I see people get into trouble. I mean, and I know in my younger days going and trying to trade, I'd sit there, and I knew this wasn't true, but you literally would go into a trade, and it didn't go your way. Instead of just taking your lumps and taking a small loss and saying, okay, that's just part of trading, you know what, I'm going to go and double in here. I'm going to go and do this because I know it's going to, I'm going to, somehow by me going and pressing that button again, I'm going to make the market go in the direction that I want it to go in. Doesn't work that way. Now, there is a place for averaging in, and there's a place for going and stacking on. Absolutely. I do it almost every day, but the thing is, you can't be doing it as reactionary. You have to be doing it based on, I'm getting proper market signals that tell me based on my statistics and based on my experience that this works, as opposed to going and saying, okay, I'm down 5 pips. I need to go and cut that 5 pips to 2.5 pips. So I'm going to just go and jump in right here, and I'm just going to go and average in. Well, now I'm sitting there. If it's not based on anything, it's just based on conjecture. Well, guess what? Or based on emotion, probably more than anything else. Well, guess what's going to happen? 50% of the time you might be right. 50% of the time you're going to be wrong. But the thing is, overall, that's going to go and beat you.
Yeah. In fact, I just brought up the pivot chart because my price near indicator said we're near the monthly pivot. We're sitting right on that monthly pivot at 133, or I'm sorry, 137.70.
Right. Yeah. So, what do we know about pivots? We know that there's a lot of people out there, a lot of big time traders out there that go and play those pivots. So what happens so often, is that those pivots, they get hit. I can't tell you when they're going to get hit, but they're going to get hit, more times than not. I mean, I know I have that one indicator of yours that I put up every once in a while. I don't play pivots, but I put it up every once in a while just to see. And one of the things that's so amazing to me, I'll have the pivot run out 5 years, 6 years, on the daily charts. And it's sort of like, there's only maybe 5, 6, 7, maybe 10 of those pivots that haven't been hit in all that period of time. That tells me, that's something that's always going to run to, and that's, but the more important thing I think for us, trading little by little is the idea, okay, we're right by a pivot point. We know it's going to do something there. There's going to be a reaction there. Okay, what are we going to do here? And that's when I talked a lot yesterday about being prepared to go and know where the market's going. Have a good idea of where the market's going. When I have a pivot here, just because you're going to hit the pivot, it may just go and touch the pivot and then reject off of it, or it may hit that pivot and decide that it's going to blast through it. I don't know what it's going to do, but I know there's going to be a reaction at that point. So if I know there's going to be a reaction, let's go and look at higher time frames. Let's look at other things on the chart that may help us out in picking an obvious bias of direction.
Yeah. I hear what you're saying. And I think, since we're talking about these little things that traders can do to improve their trading, it's one of those things about focusing on one thing, whether it's the pivot, whether it's a high-low, whether it's the weekly open, but just focus on that one thing and get it down. It's just like, I mean, Walmal, how long have you been trading just the pound?
Since 2007.
So, I mean, I know you've probably, had a couple other trades in there, but your go-to is the pound. I mean, since we've been doing this, I think it was a year ago in March or so when we first started talking on the phone and trading together, and I switched
Yeah.
over to the pound because it's like, oh, okay, if that's what you like to trade, I can trade that. And
Yep.
so, I mean, that's it. And
Yeah.
it's like, and so people go, yeah, but you got these dashboards and everything. So, it's like, yeah, here I've got my dashboard, but that just lets me know I can see what the other pound pairs are doing or the other dollar pairs are doing and say, okay, well, everything's lining up for a long or a short on the pound.
Yeah, and I'm going to be honest with you. The reason why, and this comes down to little by little again. Why do I trade that? Why do I trade the pound dollar? I trade the pound dollar because it's what I'm most comfortable with. I know that pair. I know how it breathes. I know how it eats. I know how it sleeps. I just know everything. Not that you know everything about, but I know so much about it that I can look at the chart and say, hey, this pound is just not doing what it's supposed to be doing. It's not. It's not. It's not going in and reacting nicely. It's just it's out of sorts. And that may be a day, where I say, you know what, if I'm going to trade today, I'm just not going to trade. I'm just going to trade, very, very small amount. I'm not going to risk very much money. I don't know what it's doing. I'm just not comfortable with it, or I may even say, like, I think I said to you yesterday, I didn't trade yesterday, and it was just one of those days where just not going to do it. And part of it was I was there, and this is again in the little by little thing. I've had a number of things that happened in my personal life that have really taken a toll on me over the last several months, actually. And yesterday was a day where I was just extremely tired and just worn out. It's like, today's not a day to go and trying to be have full concentration. I said yesterday on this video that you need to be fully concentrated, fully engaged in what you're doing. Well, if you're exhausted, if you've had a big major life change, those are things that you say, you know what, I'm not going to trade. I'm not going to go and take the chance here. It's just not a smart thing to go and do. And that's what we have to go and do is, those little things add up. Sometimes I think the best things for becoming profitable is not necessarily finding a method that makes you the most amount of pips. Sometimes the best thing to do is to find the things that are taking pips away from you, things that are causing you not to be able to trade at your best performance level. And you may say, well, that cost me only 5 pips here, only 6 pips there. But if it's happening consistently, that's going to add up, and that's going to go and overwhelm whatever big number of pips that you may be getting.
Yeah, and plus, when you're about the pound, you also know the statistics because you ran them, and it works with your style of trading, your method, the Walmal method. The DSR trades.
Right.
The lower high, higher lows. That basically it's almost the same as a DSR.
Yeah, and the thing is, like the Walmart method, I'm sure it will probably work on just about every pair. But here's the big caveat to that. I spent a lot of time honing in, where to take those trades, what I'm looking for in terms of profit, what I can expect in terms of profit, and trying to find out that sweet spot, so to speak, as to how to go and trade that. That's where the experience goes in conjunction with the actual statistics. Having statistics, that's an amazing, amazing tool, but that doesn't make you necessarily money. All it's going to tell you, like for instance, right now, we're sitting here on the daily range. We got about 80, 83 pips for the day. That's the 65th percentile. Okay, well that's great, and so we know that. Okay, we've already covered more than half using your smart ranges of what it would normally go and cover. But that doesn't go and get you a winning trade. It just tells you where you are on the day. So you need the next part of that, and that is to be able to sit down and say, okay, how do I go and take that number, knowing that is something. Let's say that number was still down. Let's say it was still down. Like when I started trading this morning, it was 41 pips. Okay. And I knew that was well under 41 pips, puts you probably in about the 25 percentile, somewhere around there. It's going to expand out of that more than likely.
Yeah, and
Okay?
you know what else? We're running out of time. It's the fastest 15 minutes in trading. So, traders, this week we've gone over things that'll help you prove your trading little by little. So remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumple One, over and out.